Welcome everybody, it's the Market Sniper, glad to be back with you. So we're going to talk about something tiny bit different. A lot of what we say is collapse of the West, doomsday, black pill. It's kind of bad news central, and I don't want to be the bad news central guy. I'm here to tell you sometimes fear is actually the best motivator to do positive things and to take action. And a little bit of potential future pain being avoided is as much as a gain being achieved. But in a system, much like water, much like energy, water does not get destroyed. You don't lose water, you don't lose energy. Even when you have a car and you put on the brakes really hard, you are just transferring the momentum, the mass times the velocity into heat through the disc brakes, and you are putting two very hard surfaces to work to wear each other out, your brake pads and your discs. Hopefully the brake pads are the ones that give out the most wear in the end, because that's easy to change. And you create heat and you do work, you actually destroy something very hard. And that heat goes into the air, and that makes the temperature locally go up slightly by a small amount, representative to the amount of energy that was destroyed. And heat can be converted back into something a bit more useful as well. We know that we use solar inbound rays and we actually generate electric power, etc., etc. So actually we're swimming in energy. They like to tell you the control structure of their economics is the dismal science. The official definition of economics, when I went and did economics as a subject, the first definition, the very first thing they taught us is economics is the dismal science of allocating limited resources. That was the definition. First they tell you it's morbid, and then they tell you everything is limited. And I'm here to tell you, actually, there's abundance. There's abundance of air, there's an abundance of water, and there's actually an abundance of energy. We often get manufactured bottlenecks or insufficient supply chain and logistical issues that invariably involve human error or lack of planning. But nobody should be without a cup of clean water when they need it. Nobody should be without energy, and nobody should be without light. And the ability to work. But anyway, so with that principle, money is much the same. The legacy families with all their huge wealth are not going to crash and collapse a highly inflated asset category in the West and just be poor. That's not their game. Whilst ultimately when you're as rich as them, it's more about power and control, and ever dominating power and control. So it's like a drug. They're basically heroin addicts. They're power junkies. They just keep snorting bigger, fatter lines. They keep injecting stronger opiates and wanting ever more power. They're essentially hell-bent, because the more you have and the more power you have, the more you want to preserve it and make sure other people are less and less of a threat to you. And this is why we have, well, go and watch Caesar. Go in Rome. There's a Netflix series. Oh, God forbid I actually put forward people go watch Netflix for adjusted history. Yes, you've all laughed at the brown Vladimir Putin. But yes, adjusted history says, but if you ever got bounced into something like that, you would see that Caesar sought more power. He went and said, I've done this for Rome, I conquered Gaul, I will do this and I will do this, and I need to fix Rome, and I need a 10-year dictatorship remit. And then part the way through his 10-year dictatorship remit, he said, in actual fact, I should be in perpetuity. I should be dictator for life, verging on godliness, having statues of themselves made. This is the direction of power. But before we digress too much, we want to talk about valuations. If what we are saying and the totalitarianism is coming, and the collapsing of nation states and the destroying of your pride in country is all things that we're going to turn out right on, and that it's going to become valuations a lot lower, less attractive places to live, far more totalitarian laws, a la the Soviet Union. You could never leave, you only lived in your country, and you were told it was the greatest country in the world. And that's why you had Olympians who were sometimes trying to skip and run and not return in the old days of USSR. If we were to get a reversal, this polarity reversal, and we're seeing more totalitarian creep, this is the forward play. Remember, we're trying to be Wayne Gretzky. We're not chasing the puck, we're chasing to where we think the puck will be. And if it's down here, what's going to happen is, where does the money flow? Like water, like energy, it doesn't disappear. There's going to be a running out of one area into a running in of another. These wealth legacy families, they are still going to retain their largesse and their wealth, both in the old nations, but also in the new nations. And what's actually going to happen is there'll just be more of a corporate investment somewhere else. Capital will be put to work somewhere else. Do you really believe that the only place that people could invent technological companies was Californian specific garages? Is that it? Is that it? Do you really believe? No, an investment environment was made for it. Dark state investment was made for it, with directions as to where they go. Skunk works in all forms of corporations, and government statist entities were trying to do various things. They got business talent, looked for it, and they actually created hubs, little work hubs, and that birthed for you Silicon Valley. Essentially, Silicon Valley is the seed of the satellite statist surveillance finance world that you are in, where your device is listening to you, your TV is listening to you. You're going to have a smart grid that will tell them every time you put the kettle on and how much energy you use for how many people are in there. They've even got combinations of AI and Wi-Fi that can scan and see where you are in a building. We've just today had mobile bleepers, what are they called? Pages, old school pages of certain modules blowing up on people's belts and on their tables as a result of Israeli Mossad operations attempting to undermine who they see as their counterparty in Lebanon, etc. So you're seeing devices weaponized as bombs. This is a crazy old world. This is what Silicon Valley has given us. Of course, it's also given us lots of ease of life and access to information. So rather than just focus on the bad side, we've got to accept everybody can now call anybody anytime. I don't know if that's really off beyond a certain point the best thing. My phone is largely off. People never can get through to me. It's off. I use it to get in touch with other people, and I expect them to answer, bastards. Anyway, so with all that being said, occasional jumping in and out of the internet, watching entertainment, at any time you can get almost anything. So there have been upsides. I have a YouTube channel with beautiful people like you who would never have met me, who would never been able to support me as you are doing right now, as you smash that like button. Thank you very much. Muchly appreciated. You're a gentleman, sir. And so are you, mademoiselle. Only you haven't transitioned yet. But anyway, thank you to all of you. And anyway, so this flow of capital is going somewhere else. So this is a nice, hopefully fun monologue about where things move to. And the big question we asked is, in the event of welfarism and statism taking over the ex-capitalist nations of the world, often the Western society, and largely the original indigenous white European nations being collapsed in, and that wealth factor being reduced, that the citizens have such a wealth advantage that they call it privilege. Of course, you never mention the ruling class in that privilege. That we will see a leveling, for example. Where does the wealth of those ruling classes that is built and in many of those countries flow to? Well, many of them are held in corporations, which by themselves are potentially fluid. Some of them it could be in corporations in America, in those special, remember America's the biggest offshore haven, and it's one of the reasons why Europe is frustrated with their one tax for all companies as the Europeans push their socialism into totalitarianism, communism agenda. So where does the money go? Where does money go? Where do the wealth people, where they're going to move it to? And one of our core theses is that you're going to see Middle East, you're going to see Singapore, a bit of a move there, and we're seeing the decline of Hong Kong probably leading to ever greater upside for the likes of Singapore. I would expect to see more listings and more things. At the moment, the Singapore Straits Index, as we know it, is largely made up of financial services, communication companies, etc. And I would say while communication companies and certainly did very well under the guise of Vodafone and all of these big stars that were the heroes of the 2000s, those moments have largely passed. So I wouldn't say banking is my favorite industry right now. If anything, I'm looking for upside. I'd actually be looking for mining, and I'd be looking for particularly related to precious metals. But in time, after various crashes, I would expect commodities, also potentially of copper and uranium, to go up. And of course the softs have performed very well, but I would be on the monetary side in lieu of the fact that we have a debt collapse. But the Singapore Straits Index is full of financial concerns. But if we have a downing of many banks in other areas, is it possible that the financial services that do survive will go there? And will the Singapore index, the Straits Index, as we covered in our video about 3 months ago, which we are about to show you. Here's the image, by the way, there it is. Outperformer index for next decade, this man said in a polar neck jacket. Polar neck and jacket, I should say, talking with his hands and jabbering away 19 to the dozen. We'll actually go to the chart in a minute that I was showing then 3 months ago. But the other interesting thing about the Singapore Straits Index is, while it's been unspectacular for a certain period in terms of capital appreciation, it actually throws out a decent dividend. In other words, these are cash cows. And we are going into a realm where you are sitting potentially with an interest rate spike, but you will be holding capital losses on bonds. And corporations that don't collapse and continue to generate a dividend, an income generating corporation that is not in a state of collapse, could become rather attractive, as well as telcos. It's almost utilitarian banks, utilitarian telcos. And if you start to see more of world wealth pivoting away from London, Switzerland, New York, LA, etc., into a perceived more BRICS-centric hub, I would put it to you, it's not going to be Johannesburg or Cape Town, as I would love it to be as a South African. We are, after all, the tiny S in the BRICS. It's not going to be Sao Paulo in Brazil. It's unlikely to be in India. And given the state of the world towards Russia and travel in and out of there, it's hardly likely to be St. Petersburg, Moscow, or Moscow. What it could be, and it's not going to be popular to be China either, it must be said, what it could be is this very well-developed rule-based society. And there are some things to be said. I've referred in this video that I wasn't mad about their conduct regarding the events of March 2020 and how compliance-orientated they were. But a rules-based, orderly society is has been established there, with one of the best airports. The airport, by the way, being the first thing you see when you land and the last abiding memory when you leave. And I admire nations that create or build, in infrastructure terms, an incredible first impression. The taxi drivers are very disciplined. They'll not talk to you unless you ask for them. There's no hustle like their neighbors in Bangkok, where you'll end up going to shows that I daren't even describe. I did do that in my youth. Although I'd say the best value were the Thai massages on the beach and a fruit bowl, which is far more innocent to the Bangkok experience. But anyway, so what did we say in this video of 3 months ago? So let's just have a wee look over there and see. And let's get to the technical bits. There we go. We'll shut the man up. He's got a big voice and he keeps booming away there. So we highlighted the daily. And this was, what time ago, when was this? This was, by the way, we're on 72.4K subscribers. And were you to be the people that bring us through to 75,000 since 2009, inching forward tooth and nail, were you to be the one that clocked the number 75, well, we just have to send you a present. So go ahead and hit the subscribe button. But what did we say? 3 months ago, we said that this daily, my apologies, weekly chart, it's the W that's highlighted there, not the D, was setting up what we call our favorite strategy and structure, the Hunt Volatility Funnel upside break, and that you had actually got a break. So inside our community, we're talking this pre-break, there was already a little bit of a squeezing already along the lows. I'm going fat cokey there in the transgender pink. Why the hell not? It is the sign of our times. And the argument was, this is the beginning of a triggering event that on a macro time frame has an outrageous target. So what does that tell me? Well, maybe other corporations are going to get listed that are higher growth in Singapore, because this isn't a growth equity environment. It's a mature but stable cash cowing with dividend environment, or the world is going to suddenly start appreciating dividends a whole bunch more. Anyway, this is the small part of the chart that I started showing on the daily, my apologies, I keep saying daily, the weekly time frame. And that is it there, weekly. So how have we done since then? So you were talking with us round about there. In fact, there was an interesting little dip. What was that? That gap was, you guessed it, the carry trade unwind that became the August of the sort of the 5th was when it really spilled. As we pointed out, the USD JPY had already been indicating stress, fear indicator. And as I've highlighted before, it's the USD JPY that is the fear indicator. It's the yen that, when things get deeply disorderly, gets the bid. And that's part and parcel of the carry trade and unwind. Who knows how many institutions, people have been borrowing in yen, hoovering up all that cash, and then changing the currency into dollars to invest in American instruments and or European and or Singaporean for that matter. Anyway, this is moving really, really well. The traditional entry was at about 32, so you can see it here in the box, 32.5928. Now you might say 2.69, that's not the unbelievable wealth. Well, you would have triggered in then. In actual fact, you could have got in here on the pullback on the yen trade, and you would have been very quickly up after that. So notice how this buoyancy post the yen unravel has actually seen a new high. I always respect major macro events that dip something and they respond shortly by not only taking back all the previous territory and some. And this, of course, is the feature of HVF method, which is why we trade high reward to low risk entries. The second chance would have been your best entry, by the way, but the traditional entry is where you would have been. That goes something like this. That is the 2.69. And I'm going to clarify that this is not at all a 2.69 trade in a minute, because we're going to go even higher by time frame shortly. There was, as we highlighted, a little bit of a structural setup in here that could have seen you get in even tighter. In a minute we can show you that too, but this is progressing very well from 3 months ago. And even if you are just an investor, so we get a lot of people calling in, and thank you for that, by the way. Book a call, the link is below, talking to our consultants. The key thing is, we aren't trying to make people into traders that don't want to be traders. We get that. In fact, I'm away, I'm on a laptop here. It's one of my many destinations that I stay and hang out at. And we believe in optionality and having lots of different places where you can live and have a high standard of living and move around, and not be in the tax extractors' sites where they can just destroy all your hard-earned work and send it to Israel or Ukraine to murder Slavic people or Palestinians. I'm not for that generally. I just think that's a bad deal morally and consciously, and actually I'm a better allocator of my capital than them. And one of the examples here is you just overweight here. This is an ETF that you can buy. You can be an investor. If you're not an investor, you should be an investor. Things are going to get destroyed, and other things as part of the destruction is going to see up. In other words, the whole value of the total economy is not going to fall to a couple of $1 million, all held by the ruling families. We're not going to get that. No, it's still going to be trillions. It's going to be trillions elsewhere. It's going to be trillions elsewhere. You're going to see a leveling and a sudden cease shift, much like, and I would say, It's not much like the British Empire dying. That was slow and being handed over to a friend, where the younger brother became the bigger guy, the stronger guy in the gym, the older guy became more mellow and just handed over. That is not what we're looking at in this instance. I think it's going to be far more tumultuous, and there's going to be a violent element to it, to the downside in terms of valuation lost. And it could even be hard and even no longer possible to move. But having investments in other areas is going to be serving you very well. So you say, well, what about it? It's too late now. This is almost at the 3,708, which would be a point of rest for this structure for certain. However, we're here to remind you that we are macro. We are big picture guys. And that in actual fact, when I show you this big picture, you haven't even begun to fight. You are literally at the point of triggering event. You're not getting our community members' early notification inside here, where you might have been buying here, but you're getting the call from 3 months ago. And what was it? Let's have a look at that valuation that was in the video. So we said the 3259 is the entry, and we were talking about it at 3323. 3259. So as an investor, this is not Bitcoin. This is not 20x. But can I point out that the dividend is high here, and I would suggest reinvesting it. So you should be getting at least 3.5% additionally coming in. If we have a look at what's been done since 3259 and where it is today, it's 10.24%. Today, 3,593. So you're roughly at 3,250 to 3,600. You would have made the better part of 350 on 3,250. You can see that's larger than 10%. Inside 3 months, you've made 10%. But we haven't even begun yet. As part of this stagflationary environment, assets are going to run higher. One thing I am quite clear on is that we're not a bear general equities in most areas, including even the US for now. That doesn't mean we think the valuations are sane. It just means in the flush of liquidity that probably needs to exit the debt markets, equity markets, gold, and in due course crypto, and other equity markets that have not performed like the US but might become more sought after incubators like the Nasdaq Silicon Valley was at a later case. We'll suddenly all start finding out that there's a lot of Middle Eastern garages that are inventing new tech companies, and Singaporean garages, and they're getting listed in the hub, the Switzerland of Southeast Asia, which is going to be considered a fairly relatively neutral space. Rightly or wrongly, by the way, I'm not putting forward a political view, but not China. It's not Beijing. It's not Moscow. It's not Joburg. It's certainly not Joburg, and it's not Bombay either. So what we've called over here is for a substantial move to 8624. That's really just beginning. In fact, our first interim is already beyond the smaller patterns target, I would imagine. That's 3754. How much more do we have to go on the smaller time frame? 3708. So the first interim, you're going to overshoot here likely for the 3754. That's going to be around this level before you're likely on the macro to even have a small rest. Then there's open territory to our second interim around the 5s, and then 8624. Now, the reason why I put this out, and I put it out early, is that people are going to forget that we are there for the investors. This is a macro investor. This is your 10-year trade. This is, and I call it trade, investment. You put it in, dividends reinvest, and you leave it. You could be in from the 3.2s. If you're in our community, you could have even been in 3.250s, 3.280s. If you were here, you would be in 3.4s. If you get in now, you will still be getting at the 3.6s, just before the 3.6s. And you go to 8.6, which is 2.5 times, I would imagine, in this environment with its current constituents, a very, very short time. It could be 2.5 times in 5 years. It could be 2.5 times in 10 years. And the difference is this doesn't capture the dividend reinvestment game. And I think people are going to start loving mature businesses that churn out a dividend. We're going to go back to loving real income. The super growth, the go-go, that may eventually have its, there'll be some suspicion around that. And there'll be something to be said for a good old dividend fund. So watch this one. This triggering event has occurred. You've traded to a new high. This is in spite of, actually, what's happening in the current markets. Recession fears in the US, long-standing downturn in China, Europe pretty sclerotic, Germany in real trouble, making all the right, wrong choices, I should say, the right choices for if you have an appetite for destruction in terms of its energy markets, along with the Russia malaise, committing to ESG and all the other ridiculous policies that are inherently destructive, totalitarian, woke, and communistic in all manners. In the end, it ends in a total control of a ruling class. And they are mad for that religion. Statism is their religion. Most religions are for the working classes. They're handy and useful, but for the ruling classes to exploit. This religion of statism and communism is very much a belief system of supremacy of the ruling class's right to rule, and you should be held down. This is a clear-cut triggering event. We have run our high 3. In fact, it won't be long before you are clearing the high 2, and the upside was generated by this beautiful collapse that we got in the subprime era, which, as you know, was very much a banking crisis, for which the Singapore Straits Index had a few. But I think we'll also potentially see the constituents of this index develop over time, and I think it is going to be a real overperformer. So you can get a SPDR, SPDR ETF. There's no affiliate links. Just go and find it, Google it for yourself. It's what I think will go up, and you can take our advice on that. You can reinvest your dividends. I would love to have a bit of leverage on that to spice it up a tiny bit, maybe a 2x, but you know, that's something you would have to be careful with in terms of interest rate increases. If you borrowed to do that, if they were offering a 2 times, I would possibly take it. But remember, those multiples that they sometimes put on, you don't always exactly get twice the performance. This is low cost. It is super low cost. These are a simple example of a very useful investment position that you could have taken, for which in 3 months you've got 10%, plus this year you will probably average a 3.5% dividend on top of in that 3-month period, which if they were to continue in such a similar vein, could in fact be a 40% a year. You'll note that you are not really, in terms of the highs of 2008, this has been a relative underperformer, in fact, because of its constituents. And these underperformer indices of many a decade, I will say to you, 2007 is now quite a long time away. It feels to 24, quite a long time away indeed. 13 plus 4, we're talking about 17 years. I will point to our Nikkei calls in terms of the 40-year bear market there after its highs, and I'll say to you, this has the benefit of being an upside HVF as well, which is likely to see rude, quick catch-up pace with the squeezy and the squeezy. And we have spoken a lot of a demand-destroying event. But it seems to me that this stop has now stood. We had at once wondered there, could it do one more down leg? We've got a big down leg for the first, we've got a big down leg for the second. It appears that was it, and the little primer pattern that we call it is in fact triggering the breakout. Once you have crossed that green line, it is a triggered pattern, and we treat it as a higher probability of outcome. In essence, you've made a new high that you haven't made since 2018. That's starting to be a long time ago. 6 years, it's a new high that hasn't been seen in 6 years. And shortly bypassing that will be a new high of, wow, did I work it out in the end? I think it's 17 years, bearing in mind we're almost 2025. 17 years, a new high coming not too far away. and I'll get that number for you. That is going to start hitting the headlines, and I think this will be a very good place for capital formation in the future, and a stable place that has underperformed, by my view, for quite some time. So we will be making a new high with an HVF structure. Okay, that's the message for you, a quick update. While everyone is wondering, will Fed do 2 or 1 cut, etc., etc., we are saying to you, how heavily are you committed to gold? We will tell you when the miners and the silvers are the pivot, and how are you investing macro in the likes of what we're showing you here. That can be a lockup, a monthly investment, an add, dividends reinvested for the better part of 5 to 10 years, which should actually see you make substantial. Bear in mind, the capital appreciation were you to make 2.5 times here. When you add monthly contributions and dividends reinvested, would actually probably more likely see you at about 3.5. It could even push you beyond that in terms of returns. For a period, I would say, who knows? Could be 3 years, could be 5, could be 10, but a very good return nonetheless. Watch out for other forms of businesses relocating and getting listed there. As America loses its shine, as New York loses its shine, and it is losing its shine, as London loses its shine, and it too is losing its shine, as the Swiss surrounded by Europe start to pivot and look east, you will probably see the rise of Singapore. It's yet to have its finest hour. The place of the great airport to both depart into and arrive from is going to go up, up and up. And I reassert our original call, long the STI. Till next time, book a call if you want to do investment related things as well. By the way, this is still tradable on lower times for those that love to trade, but positioning in front of the best big waves and letting the market do the work for you is the smartest thing. And people that are jumping in, jumping out often miss some of the best days. It's been shown by statistics that just missing the top 11, 12, 13 days in a year makes a marked difference. Some things are just worth buying and holding, especially if you have the power of a 17-year setup that has broken, and yours truly is telling you the month that it has broken, and it will likely close above. We did have a feign and break there and a dip back, and that is part of one of the 5 stages of a breakout that we teach you in our program, whilst practically investing and showing you what we are looking at and what we are investing at. We warn you of the break and feign back in, stage 1. Then we get the reassertion and the first interim move. And eventually you get to the point to melt up or capitulate, which is often usually stage 3. And you don't want to not be in the market when a lot of hot liquid cash is being passed into. This is a PE ratio of 11, remember. Compare that to what's going on in America. If America starts to lose its premium, who gets a premium? At 3.5% dividend yield and only 11 PE with big stable businesses, you will be surprised. Don't miss the melt-up phase, which is when you make the bulk of your profits and is vast. Till next time, I'll catch you later. Thank you for hitting the subscribe and doing a share to all those that are interested in investing in the world, around the world, out of the West, to ensure capital preservation, optionality, and real exposure to areas that are not in a state of controlled collapse. Till next time.
Tired of profit wipeouts and blown accounts from following trade signal groups and other YouTube channels? Looking for a better way to trade, reduce your stress, and minimize your risk? Become a skilled technical analyst and see the charts and markets in a new light using the successfully proven HVF method by Francis Hunt, while being surrounded and supported by a principled, structured, and experienced community. Enjoy a constructive learning environment while practically trading markets, supported by a bespoke platform run through browser and app, specifically designed to teach and engage you whilst learning and growing as the markets move. This is not a Telegram or Slack signal group. All trade ideas are based on a proprietary technical analysis process honed over decades, which is the HVF method, leading to trade ideas with fast-moving breakouts and tight stops, exact entries and exits, nuanced interim considerations, and ultimately, strong rewards. Submissions are graded and scored by Francis for potential high-quality setups, and we provide bespoke tools to help get the job done properly and with precision. Over time and with focused effort, you'll begin to look at charts and price action just like Francis. Community updates every day by Francis and our 3 webinars a week provide a 360-degree approach, which are presented by our experienced team of trade leaders to spot potential trades. We're a community of self-actualized individuals, spanning the globe and active 24/7, 365. The premium community provides a warm, supportive, and cooperative place for people willing to listen, participate, contribute, and to learn. We've changed thousands of traders' lives. Transform your approach to trading now. Transform your life. Book an introductory call with us on the link below.